Good afternoon. My name is Fred Van Dorp. I am the Budget Division Director for the Department of Local Government Finance. Would like to welcome you to the Introduction to the New Form 4B webinar. This is the second webinar that the Budget Division has done this year. You will be able to find all the webinars that we are doing posted on the department's website. The one we'll be looking at today is an introduction to the new format for the Form 4B that will be used for the first time during the Budget 2021 season. This presentation is designed to provide an introduction and an outline to that new format. We're going to start off by examining the purpose of the Form 4B, including a deep dive into the current layout, including tracing the existing information back to its source material. The second thing we're going to take a look at is we're going to introduce the new format, including the department's goals and guidelines as we were putting together the new format, and then we're going to go line by line through the new format. And then finally, we're going to settle in and discuss some of the frequently asked questions or some of the best practices for using the new form. All said and done, this presentation should be between 30 and 45 minutes, and it's designed to start the conversation. Part of the reason why the department is sharing this information so soon, we know that we are still 3 months from the earliest beginnings of the budget season. We are still 9 months away from when you may find yourself in Gateway. But we wanted to make sure that you knew that we were making this change so that we can reduce the number of people who are potentially caught off guard by the changes that we will be rolling out this budget season. And so let's start by discussing the purpose of the Form 4B. Now, if we're looking for an easy definition of what this represents, the 4B sits at the heart of the budgeting process. On the left side, we can see that input forms, like the current year financial form or the debt worksheet, Form 1 or the Form 2, can serve as the source material. That is where units are reporting values to the department. The information flows from those input forms into the 4B. In the 4B is where we're actually calculating the property tax levies and rates. Once we've calculated those levies and rates, we can take information from the 4B in order to populate our Form 3 or our Form 4. So the Form 4B is summarizing the financial status of the fund, but if you're looking for a snapshot to explain what we use it for, this is that snapshot. If we're looking for a more structured or more formal definition, this is another way of looking at the way the budget forms sit together. The forms at the top, the ones in blue, represent our inputs. This is where you are reporting to us values on the current year financial worksheet, like your June 30th cash balance. You're reporting to us for the Form 1 information, the detailed information about each one of your expenditures. On the Form 2, you're providing us with the totals for your miscellaneous revenue. All that information flows into the Form 4B. We're using that to calculate the levies and the rates. And then, depending on the time of year, we will use the information from the 4B either to create our notice to taxpayers on the Form 3 or to generate the actual adoption ordinance or resolution that will be used to formally adopt your budget. So just a starting point for representing how the 4B is currently used. Now, the current format that we are using for this calculation dates back to the 1950s. Now, we know that the property tax cycle has changed a lot since then, but the general format of a siloed approach and examining the revenue and the expenditures to calculate what the tax rate is going to be has been a consistent form in the state of Indiana for the last 70 years. The current 4B is divided into 3 very distinct sections. The first one, which we have labeled in Gateway as funds required for expenses to December 31st, represents a silo containing 18 months of expenses. And so in this section, we're going to see what your budget is. We're going to see what your planned expenditures are for the last 6 months of this year. We're effectively going to be looking at activity from June 30th of the current year all the way through December 31st. So 18 months worth of activity is going to be siloed into first section. If the first section was focused on expenditures, the second section is focused on revenues. And so the section labeled funds on hand from sources other than tax levy, this is where we're going to be looking at your cash balance as of June 30th. We're going to be looking at your miscellaneous revenues like local income tax or the financial institution tax, or see that those other revenue sources other than your property tax levy that are going to be used to fund the expenditures in the first silo. The third silo is where we actually get into the calculations, where we actually calculate your levy, where we calculate your operating balance, where we're going to be calculating your tax rate. But this is conceptual, so let's take a moment to take a look at the detail associated with the current format. Now, one of the difficulties whenever we're discussing the Form 4B is it doesn't lend itself well to one page, and so we're going to take a look at the current template, but it's going to take 2 slides to do it. On the current 4B, lines 1 through 5 all correspond with expenditures, and so the first line that we'll be looking at is your total budget estimate for the year. And so the detail information comes from the Form 1 through the 4A to arrive on this form, but we're looking at all your expenditures for the next calendar year. If you are a school, we've got a place where you can report your transfers. For lines 2 and 3, we're looking at expenditures planned for the remainder of the year. Or on line 3, we're looking at any additional appropriations that are going to increase your spending authority. The source material for both of those are the current year financial worksheet, but this is where that information flows onto the 4B. Lines 4A and 4B represent temporary loans, so either whether or not they're going to be paid before the end of the calendar year or not paid before the calendar year, we're going to include those in our expenditures. It's still information that's coming from the current year financial worksheet, but this is where it's going to flow into the 4B itself. Line 5 is a sum of all of those expenditures from those 18 months. So whether it is expenditures for this calendar year that'll close out your current budget, or whether they're expenditures planned for next year, we're going to look at this first silo as 18 months dedicated only to what you're planning on spending. The second silo is the one that we're going to look at that's relating to revenue. So line 6, middle of the page, we are starting off with your June 30th cash balance. How much money do you have available, just cash in hand plus investments that you can use to fund any planned expenditures over that same 18-month period. It's information that is reported to the department on the current year financial, flows into the 4B into line 6. Line 7 are your taxes to be collected. And so we're looking at most often it's your December settlement, what you think you're going to receive in the second half of the current year. Line 8A and line 8B, this is our miscellaneous revenue. Information coming from the Form 2. The first line represents 6 months of activity. The 8B represents 12 months worth of activity, but we're looking at revenue other than your traditional property tax levy that can be used to fund your budget. Line 9 sums all your revenue sources together to figure out how much revenue you have. And so in this particular example, we're looking at a unit that is planning on spending $14.7 million, as represented by line 5, against revenues of $9.2 million, as represented on line 9. This tells the department that in order to fund this budget, they are going to need to raise at least $5.5 million. And that's the amount that we're seeing on line 10. Now, the bottom half of the 4B is extremely important, but one of the more complicated forms, the most complicated section of one of the more complicated forms involved in budgeting. The first line represented is your operating balance, and in fact we're going to come back to this line and we're going to work our way through the 12 through 17 before coming back to the operating balance. Operating balance should be the star of the show, but let's touch on some of the supporting characters before we do a deep dive into that one line. Line 13A is a line that has outlasted its purpose. For all 2,500 units in the state of Indiana, line 13A is always set to 0. Line 13B is used exclusively by lit levy-freeze communities, 12 of which 12 exist in the state of Indiana. For any unit that is not in one of those 12 counties, that line will also always be 0. Line 15 is a line reserved for the department for levy excess calculations. Line 16 is the amount of levy to be raised. So this is what you're advertising, this is what you're adopting. This is what we should be looking at on a line like this is the amount of levy that will ultimately work its way to your budget order. Line 17, based on the assessed value presented, based on the amount of levy to be raised, we're able to calculate what we think the tax rate for this particular fund would be. Okay, so that covers those lines. Let's go back to line 11, because this may be the most important line on the sheet itself, from both a department perspective and from a local perspective. Now, the department is often called upon to balance a fund's budget. The easiest way for a unit to tell whether or not the department is going to have to balance the budget is by looking at line 11. The department cannot certify a budget if line 11 is negative. Right? So this is when we evaluate all the revenue coming in, when we examine all the expenditures planned, when we factor in the cash, when we factor in everything. If line 11 is negative, it means that the unit if they spent their cash balances all the way down to 0, they can't afford the budget as it's currently being presented. The department would need to cut the budget, or the department would need to balance the budget such that line 11 is in 0. And so, as you are working on putting together your budget, using the line 11 as a tool to make the determination of whether or not you can afford the budget that you are proposing is one of the features that line 11 gives us. The other thing that we use line 11 for is to make the determination for cash flow purposes of what will we do once this budget is concluded. And so in this particular example, the advertised and adopted amounts are 0, which means as of January 1, following this budget cycle, this unit and this fund will have no money in the fund on January 1st. If the only revenue going in is a tax draw, they may need to provide services out of this fund, but they will not receive their first distribution for another 6 months. Monitoring the operating balance is an extremely important function for both locals and for the department. All right. The last line on the page are the property tax caps credits. This is information reported on the Form 1 and then summarized on the Form 4A. This is where units are reporting to the department their estimated property tax cap hit. What amount of levy are they not going to collect during the course of the year due to property tax cap losses? The amount is reported here, but is included through the calculation on the sheet itself. Outside of Gateway, the other place where units will interact with their Form 4B is on their 1782. And so that's what we're looking at on this screen, is the 1782 layout of the 4B. And other than finding a more logical place to put the property tax cap estimate, we're still looking at the same information as we had on the previous screen. And so in this case, instead of the property tax cap being down at the bottom, we're presenting that information on line 1B. Now, in order to populate the information on line B, the department needed to introduce the concept of a gross budget and a net budget. And so, gross budget was the 14.5 million. The estimated circuit breaker for this sample was the 590, which means that the net budget we'll be working our calculations off is the 13.9. Lines 1A through 5 represent our expenses for our 18-month silo. Line 6 through line 10 represent our revenue and expenses. Our cash and revenue for the 18-month silo, and then the bottom half of the report is those same calculations, including our line 11 operating balance. Okay, so that is just a quick recap of what the 4B used to be used for, or the current format of the 4B, where the information comes from, how the calculations work. Let's pivot now to taking a look at the new Form B, the new Form 4B template. Now, with a template that dates as far back as the 4B, the department did not take changing this form very lightly. We wanted to make sure that we were going to be able to create a better form. We want to make sure we were creating a better form, one that provided more information to the units, that it needed to be an improvement in all aspects. Otherwise, we would have left that. We would have continued to use the existing form that we've all grown accustomed to. As we were working on creating a new template, these were the 5 reasons, or these were the 5 things that we wanted to accomplish with the new version. Number 1, we wanted to use the same source material for the new template, and what that means is, as we examined the 4B, we wanted to find another way to lay out the same information we had without creating a new form, without creating a new reporting requirement, without collecting more information from each unit. We wanted to make the determination of how do we present the information that we do have without increasing the reporting requirements for the units. So that was an important box for us to check as we were considering our new format. Number 2, we wanted to present the revenue and expense information chronologically. In the existing format, we are looking at 3 silos, right? 1 silo for expenses, 1 silo for revenue. We wanted to change that up. We want to take a look at, we're still going to look at 3 silos, but the first silo isn't going to be dedicated to just expenditures. The first silo is going to be dedicated to revenue and expenditures in the last 6 months of the year. The second silo we're going to be taking a look at revenue and expenditures during the 12 months of the budgeting cycle. By separating it so that we can examine our revenue and expenditures chronologically, it gives us a better sense of the position that the unit will find itself in during the course of the budget season. Number 3 is also a very big one. We wanted to eliminate this concept of gross and net budgeting. Right? We wanted to find a place to put the circuit breaker impact that wouldn't involve us introducing this concept of a gross budget and a net budget. We want to work with a single budget, and we want to find a better place to put the property tax caps. Number 4, we wanted to make sure that the operating balance was in a much more prominent position for the reasons that I talked about before, the importance of that number in the budgeting cycle. We wanted to take it from the middle of the format and put it into a place that is clear both what it is, what it represents, and how that number can be used. The operating balance should be the star of the 4B, and we wanted to make sure that we put it in a place that was consistent with its importance. The last one is a philosophical change from a budgeting perspective. In each of the silos that we will be looking at, we are going to start with a presentation of the revenues before the expenditures. We are going to put units into a position where they are going to consider what resources they have, both property tax, miscellaneous revenue, and cash. Where are they currently sitting before transitioning to considering what they plan on spending? We want you to know how much you have before making the determination on how much you'd like to spend. What we're hoping that'll do is, in the long term, give units a better sense of whether or not they can fund the budgets that they are proposing. If you know that if step 1 was to identify that you only have $1 million in terms of all of your resources, adopting a budget of 1.2 million is incompatible with the amount of resources you have. So we wanted to put revenue first wherever we could. Let's take a look at that another way. So the 4B will still have 3 distinct sections. Section 1, current year. Section 2, budget year. Section 3, the data entry and rate calculation. In the current year section, presenting this information based on what time periods we will be using during the upcoming budgeting cycle, the current year section for this year is going to represent June 30th, 2020 through December 31st of 2020. In this section, we're going to separate it into 2 subsections. Subsection A, cash balance, revenues. Subsection B, your expenses. In the budget year, we're going to be looking at the time period from January 1 of 2021 to December 31st of 2021. We're going to break down the budget year section into two subsections, one for revenue, one for expenses, and then finally we'll take a look at the data entry and rate calculation sections. So let's start by examining the current year section and what lines will fall into that grouping. Now I'll warn you that just like we saw in the previous section, it's going to take more than one slide to see the new format in its entirety. So we're going to go section by section, but know that that's the goal. So this represents the new current year section. We can see in that dark blue color at the very top that the header, the section we're looking at, is the current year section. This tells us that the time period that we're going to be examining, the silo that we're going to be examining, is the period from June 30th or July 1st through December 31st. The first subsection that we're going to see in that timetable is the cash balances and revenues. If we find that blue color a little bit later, the next subsection that we'll be looking at is the subsection for expenses. So our silo is going to cover the 6 months. We'll examine the revenues, and then we examine our expenses. Let's go through that first subsection. And so for your cash balance and revenues subsection, we are going to be starting with your June 30th cash balance. The source material is still going to be the same. We're still going to populate it from the same information that's presented to the department on the current year financial worksheet. It used to be line 6. If we are looking at this chronologically, let's start with the first number that we have. We're going to move what was previously line 6 to the first line of our new format. So in this unit, we're starting off with a June 30th cash balance of $1.5 million. The second thing we're going to look at is property taxes to be collected. So this is very often the amount you're estimating to collect in your December settlement. Also information we're getting from the current year financial worksheet. On the old form, it used to be line 7. We have that now in the second spot. So for this particular unit, they are expecting that they're going to collect $1 million during their December settlement. The third line that we're going to be taking a look at in this subsection is your miscellaneous revenue. Source material is going to continue to be the form 2. This used to be line 8A on the old format. We're going to move that into the third position. Line 4 is our first subtotal. And so beginning with our cash balance, adding in our property tax to be collected, adding in our miscellaneous revenue to be collected in the next 6 months, this unit, if they didn't make another expenditure this year, would see their cash balance raised to $4.5 million. So that was subsection 1. Now, we can very rarely go 6 months without spending, so let's take a look at how the department plans on presenting expenditures in this 6-month silo. So in the expenses subsection, we are going to be starting off with our necessary expenditures. So this is your remaining appropriation on the current year budget. The source material is going to continue to be the current year financial worksheet. On the existing format of the Form 4B, it used to be line number 2. Now we have it in line number 5. Line number 6 are any additional appropriations planned. We'll be using that to increase we're looking at planned or already occurred additional appropriations that would have increased your spending authority during the course of the year. They used to be presented on line 3. The source material is going to continue to be the current year financial. If a unit has any additional appropriations, this is where we're going to log it. Line 7 is going to be the sums of line 7A, 7B, and 7C, and let's take a look at those in a little bit more detail. So we have a single line on our form that's going to represent your outstanding. It's going to represent your temporary loans that are outstanding and any transfers you have. Line 7A, 7B, and 7C is how we break down that total into more detail if we need to. And so we will ultimately summarize any information reported in A, B, or C into line 7. So for this particular unit, we can see that their total expenses for the last 6 months of the year is $3.5 million. So the necessary expenditures plus this school transfers shows us that their planned expenditures for this particular fund are $3.5 million. Now, line 9 is going to be a comparison between the revenue that's coming in, the cash balance and revenue that was coming in this year, and the planned expenditures. And so, in just a glance, we can see that the estimated cash balance as of December 31st of 2020 for this particular example is going to be $1 million. So just a quick recap. For the current year section, we started with the June 30th, or the June 30th cash balance. We added in revenues for the last 6 months. We subtracted out any expenses for the last 6 months, and we ultimately ended up presenting a subtotal that represented your estimated cash balance for December 31st. Now, in this example, if we go back to the full current year silo, we can see that line 1 shows us that the unit started with a cash balance of $1.5 million. By December 31st, they had spent more than they had brought in, and so their cash balance had dropped from $1.5 million down to $1 million. This is not, the department doesn't have a position on whether or not this is the right move or this is the wrong move. What we're trying to do is make sure that with our new template, we can illustrate what is happening to the cash at these two specific points of time, assuming that all revenue expected is collected and all expenses proposed are actually made. A unit can see that in a 6-month period, they will be spending more than they are bringing in. In this case, it's the difference between line 1 and line 9. Okay, so that's the current year section. Let's do the same type of examination on the budget year section. And so this is what the budget year section will look like. Again, starting with that dark blue bar at the top, we can see that this silo is identified as the budget year, and so we're looking at activity from January 1 through December 31st of 2021. Our first subsection here is going to be revenues, just like we saw in the previous section. The next subsection will be expenses, just like we saw in the previous section. And then finally, we're going to settle in on the operating balance. And so one of our goals was to make that operating balance in a more prominent position. If we're going to call it the bottom line of the budget, by putting it into line 18, we will see that we will be ending our calculations with that particular number. We'll also see that the department will make clear what your AV and your property tax levy, so below the form itself, we're still going to be able to present to you the calculations we'll be using to arrive at your property tax rate. Okay. But let's take a look at the revenues subsection. Line 10 is going to continue to be a reserved column for the DLGF application of any levy excess. Used to be on the line 15. Now we have it on line 10 as a potential revenue source for a unit. Line 11 is your property tax levy. Again, focusing on revenue. This used to be on line 16 of the existing format. This is with luck, this will be the number that you see on your certified budget order. That's the property tax levy for this particular fund. Now, while the information is presented here as a total, we will see in about a dozen slides that the units will still have the same data entry assistance in figuring out what their property tax levy is. In Gateway, units will be able to use the DLGF calculator to determine whether or not they want to hit a target tax levy or a target tax rate or a target operating balance. And so those functions will still exist, but this is where that information will be listed. Line 12 is a significant change from the previous version. Going forward, or beginning in the budget 2021 season, the property tax impact, the circuit breaker loss, will be presented as a standalone line as a negative adjustment to revenue in the budget year section. What this will allow the department to do is to remove any traces of the circuit breaker from the Form 1 and the Form 4A. It will allow us to remove any language around the gross or net budget. You will now be able to, or we will be transitioning units back to adopting just the budget, full of the traditional, or the more traditional expenditures during the course of the year. We're still able to factor in the impact of the circuit breaker, but we're going to treat that as if it's a negative revenue and not as if it's a positive expenditure. Line 13 is the miscellaneous revenue collected between Jan 1 and December 31st. That's still information that's going to be coming from the Form 2. It is information that used to be presented on the line 8B. Now we've got it as a standalone line in the revenue section in this particular silo. So in this particular case, we can see that in the calendar year, the unit is planning on having a levy of $2.5 million. They expect that they're going to lose $300,000 of that to circuit breaker. They've got miscellaneous revenue of $4 million. The budget year's total revenues are what's presented on line 14. That's going to be $6.2 million worth of new money coming in. Now, it's important to note that with line 12, it will always be treated as a negative amount. And so in order to calculate line 14, we're just going to sum 10, 11, 12, and 13 together. Okay. So if that is the revenue subsection, let's pivot to the expenses subsection, which should look familiar. Line 15 represents your budget estimate, right? So that's the information from your Form 1. That is information that used to be on line 1. We now have it on line 15. So we're going to summarize the detail that was on the Form 1, and this is where we're going to present it on our new Form 4B template. Line 16 should also look a little familiar, similar to what we saw in the current year section. Line 16 is made up of transfers, temporary loans, but instead of for the last 6 months of the year, these are going to be the ones for the next for the 12 months of the budget year. We're still going to separate out the individual detail there. We're going to summarize it all together so we can ultimately arrive on a single amount representing those outstanding temporary loans and transfers total. Line 17 gives us our subtotal for the expenditures. So in this case, the $6 million worth of budget, the $1 million worth of temporary loans, $1 million worth of school transfers tells us that the planned expenditures during the following 12 months is up to $7 million. Now, one of the expressed goals in this new format was to put operating balance into a more prominent position, and that's where we're actually going to end the budget year section, is with the operating balance. As you are working on the new template, if you find yourself with a negative amount in line 11, the department will have to balance your budget. We will have to cut down your 2021 budget expenses to the point that the line 18 is at least $0. Also, just at a glance, a unit will be able to see that my line 11, or this unit in this example, will be able to see that they've got $200,000, and they will know that that is the $200,000 that they will try to function out of from the December 31st or from January 1 following the budget season until they get their next tax draw. And so this becomes a very important for planning purposes. It's out there in the open. It is in a prominent position on the form where we can see exactly what our operating balance will be at the end of the budgeting cycle. Now that calculation there is going to be line 9 plus 914 minus line 17. So line 9 is what we calculated as our estimated December 31st balance in the current year section. Line 9 were the revenues that we were collecting during the budget year. Line 17 are our total expenses. We can see how that operating balance was calculated. Okay. Beneath our calculations, we're going to continue to present the same information about the AV that would be used, along with the levy that was on the previous slide, in order to calculate what the estimated tax rate will be for the upcoming budgeting year. As a recap, for the budget year section, we're going to look at all the revenues, including a negative adjustment for your circuit breaker impact for the 12 months of the budget year. We're going to subtract out the expenditures for that same 12-month period, and then we're going to add those two amounts, or we're going to sum those two amounts together and compare them to the total from the current year section. We are going to end with the operating balance, give you an indication of what your cash flow is for the purposes of cash flowing, or try to determine if at the current levels there will be fund deficit spending. Okay, so let's go back to the full template for the budget year section, and In this example, we started off, line 1 was the June 30th cash balance of 1.5 million. We knew that they were going to spend $500,000 more, and they would have a December 31st, 2020 cash balance of, they were going to spend about $500,000 more than they brought in, which would leave them a cash balance of $1 million as of December 31st of 2020. As we continue to examine this budget, we can see that they're going to end the budgeting cycle with a cash balance of $200,000. Now, the goal here isn't for the department to say that is right or wrong or good or bad. The impact of that will vary based on unit, on fund, and on the goals for that particular fund. The goal of this example is to illustrate how a unit can monitor their cash balances at those 3 key places: June 30th, December 31st of that year, and then December 31st of the following year, to determine whether or not they are funding their budget by drawing down their cash balances, or if they are budgeting in a way that they are building up their cash balances. We just want to make sure that the form is giving you the tools you need to make the determination as to whether or not your current decisions are consistent with your long-term goals. Okay. The last section wanted to take a look at deals with the data entry. For as much information as comes through the inputs onto the 4B, there are still pieces of information that we need to collect in order to actually calculate the values on the 4B. Those 4 values are your net assessed value estimate, your property tax levy, your estimated circuit breaker losses, and then for schools, there's information we need to collect relating to your transfers, and we're going to work our way through each one of those sections now. The assessed value that we'll be using for our calculation is pretty straightforward. You'll enter the AV there, and that'll be the AV that's used for the funds calculation. The method selection is how units will make the determination as to whether or not they want to hit a target levy or a target tax rate or a target operating balance. So that is functionality that currently exists in Gateway. We wanted to make sure that we kept that functionality around. So units will still be able to pick which one of their goals is, and the system will assist them in that calculation. The population of information will be done here, but it will populate the corresponding rows on the actual 4B template. Once we've performed that calculation, we will present the information that we've used, the levy, the AV, and ultimately the tax rate, the tax rate that will be certified for the fund. We will lay out all that information so a unit can see it. Since the circuit breaker estimates will no longer be presented on the Form 1, we will need to collect that estimate from each unit. Units will just populate the circuit breaker estimate that they are planning on using. The cell will be formatted in such a way that it will always treat it as if it's a negative number. We know that circuit breaker represents a reduction in your revenue. So whether you put in positive 300,000 or negative 300,000, we will always treat it as if it's a negative amount. We will use it to reduce the amount of revenue that you are anticipating on receiving during the budget year. You'll populate it here, but you'll see that value appear on the actual 4B template. For schools that are planning on transfers between their op and education funds, this is where you will report that information to us. The first column will take care of any transfers for the last 6 months. The second column will represent any transfers for the 12 months of the budget year. The last one is an override section, kind of an emergency override section. We know that during the budgeting process, sometimes we are required to take action quickly. In a case where a unit needs to override the amount of detail information on their Form 1, we're going to build directly into our new module the ability to override that amount in order to make sure that the outputs from the 4B, either the Form 3 or the Form 4, have updated budgeting information. This is not a feature that everyone will be using each year, but we're building it into the front end, so in case we need to break glass in case of emergency, we have the functionality to allow us to do that. Okay, so while the 4B is still going to be populated from external sources or from our input forms, the units will be manually populating their AV target tax rate, levy or operating balance, circuit breaker loss, and for schools planning transfers, they will need to populate that information as well. Okay. Just a couple more slides, and then we'll be done. The last section I wanted to take a look at were just a pair of frequently asked questions, or a trio of frequently asked questions. The first one deals with a very small subsection of units. If you are currently in a county that is lit levy freeze, where you are reporting that lit levy freeze amount to the department on line 13B, you'll notice that that is one of the few rows that did not find its way into the new template. Instead of creating a row that we present to everyone, but was only used by only a few units around the state, what we're going to do is we're going to continue to we need to include that revenue in our budget certification, but instead of putting it directly onto the Form 4B, using a revenue type R105, lit levy freeze will be reported as miscellaneous revenue. It will no longer serve as a standalone line. And so you'll still get a chance to report it. We'll still consider it as we are certifying your budget. You'll just treat it as a miscellaneous revenue and not as a line that's being populated onto your actual Form 4B. On line 7B and line 16B, both were labeled reserved, and that is, we're currently using those as a placeholder. If we take a look at line 7A, and similarly if we took a line at 16A, we could see that there are two distinct things that are being summed together: the transfers out and the outstanding temporary loans. In this first year, we wanted to envision the complete form. In year 2, what we'll be doing is separating, both updating the current year financial worksheet and updating the 4B so that line 7A can be used exclusively for transfers and line 7B can be used exclusively for these outstanding temporary loans. We get questions about those as individuals, and so what we want to be able to do is to present those informations as two individual lines. We also did not want to release one template this year and then release a new template next year, so we've created ourselves a placeholder that we've marked reserved, knowing that we will revisit our format and ultimately use the placeholder lines to populate it with more information. Okay. The last question is, what happens next? Right. So the 4B transition is going to be one of the centerpieces of DLGF communications for the next 9 months. Right. So from the pre-budget cycle through the budget workshops, through the actual budget certification, and the distribution of the 1782s, we're going to keep talking about this. We want to make sure that we get the word out, that no one is surprised when they see the information presented in a different format. This recorded webinar is the first step in getting that information into the hands of units. We want to keep talking about it. We want to keep fielding your questions. We want to make sure that you are as comfortable as possible with the new format before we get into the heart of budget season. In the month of April, we will be collecting any of the frequently asked questions that we received on the new template, and we'll start to release that information on a periodic basis. We want to make sure that you've got access to the department's current positions. We want to make sure we're sharing with you any of the feedback that we are sharing with anyone. We are also planning on releasing a workbook that will be pre-populated with the actual information used on the 2020 budget. We're going to present that information on that workbook. We're going to present that 2020 information simultaneously in two different ways. On the left side of the screen, you'll see how the budget information is populated under the current format, and on the right side of the screen, you'll see how that same information is populated under the new template. The goal here is just to give you a sense of, had this been in place last year, that we would have used the same information from the same places, but ultimately just laid the information out in a slightly different way. That book will be made available to your field reps. We'll also be posting it on our website. Every unit that had a 2020 certified budget, every fund for each one of those units, so this thing is pre-populated with 11,000 funds that you can just take a look at. So whether they be your debt funds, your cumulative funds, your general fund, your operations fund, all of them are in that workbook, just stage for you to take a look at. One of the other things that the department is planning on building is a blank 4B template with an interactive data entry section. And so in that case, we wouldn't be populating the 2020 information. You could populate you could use any estimates that you would like. And then you could use the data entry section to hit a target tax rate, or to hit a target operating balance, or to hit a target tax levy, depending on what you populate. You can see how you can use this the template that we are still designing, as we are still working on, to start simulating what you'll see during the upcoming budgeting cycle. Okay, so if that's what the department is working on, our goal for what happens next locally would be that units continue to begin to familiarize themselves with the new template ahead of the upcoming budget season. Any questions, concerns you have, we'd ask that you engage directly with your local budget field representatives. Email, telephone. Once we get the green light to start doing county visits again, this is a great conversation to have about what you heard here today, what you've seen. Any questions, any concerns, any thoughts you have on it. We would ask that you share those directly with your budget field rep. They will route those vertically so that we can continue our conversation. And then just keep an eye out for those frequently asked questions documents that the department will be releasing, just so that if maybe there are questions that you had not thought of, or maybe there's questions that you were looking for an answer for, we will, while your field rep may provide you an initial answer to that question, by putting all of our questions in one place, we'll be able to disseminate good, clean information to everybody around the state of Indiana. All right, thank you for listening. If you have any questions, this page is full of contact information for the department. If you are unsure of who your local department budget field representative is, there's a link in the middle of the page that will take you to a map. Your field rep from last year may not be your current assigned field rep, but if you're interested in figuring out who your new field rep is, we have all that information posted here. Okay. Thank you for your help. This will be the first conversation of many. Hopefully you are as excited about this transition as we are, and look forward to another successful budget cycle. Have a good day.